Good afternoon, guys. It's Workin, bringing you a very quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase, and we've had a little bit of a move here in the last 8 hours, guys. I told you on my last update we had broken through 3250. I told you that we were over here, guys. I told you as soon as we broke through decisively 3250, $3,000 was becoming a very, very real probability. We did not see that. Price came down, got as low as, I think the low was about 3,100. It depends on the exchange you're looking at. I think on Coinbase it was like 3,120. On some other exchanges, I think it went below like 3,080, 3,100, something like that. But never quite reached 3,000. Was about $100 shy of reaching that $3,000 mark that I was telling you guys about. And one of the things that we were watching, if we come over here and I bring up pardon me, I bring up our moving averages and exponential moving averages here, our exponential in this case, on the weekly chart. One of the things that I told you guys to watch on my last update was this 200-day moving average. Told you guys that this was going to be something that we were going to be watching as it was hitting that. The last time we spoke, it was sitting right on top of that. And I told you this was kind of that last stand between coming down to that $3,000 to $2,500 Bitcoin and lower. I told you that if that 200-day moving average on the weekly chart did break, that things would get ugly very quickly. As of right now, guys, we have seen a little bit of a spike. Now, I'm watching this closely. Did we have the criteria that I'm watching, guys, as I always tell you, is volume. Volume is going to be critical. As soon as we see a massive influx of volume, I'm going to start to get excited that we've seen bottom. As of right now, we come over here, we look at volume, we're sitting at about 5.4 billion on the day. That's a little bit of a spike. If we look at the last couple days, we were at 3.5 billion, 3.7 billion over the last couple days. Before that, it was 4.3 billion, 4.1 billion. So a little bit of a spike, guys, and a lot of that came within the last 8 hours or so. So, that's not, I don't want to downplay it, but right now, guys, all it is a blip on the radar. It's not something that you ignore, but it's not something that you get that you get overly excited about either. It's something that you monitor, and that's what I'm doing right now. I'm monitoring this now. I know a lot of people are viewing this here as this descending wedge here, and you could certainly make a case that this is a kind of a descending wedge, and certainly we kind of reached the apex of that wedge here. And if this thing does continue up, then okay, we can validate that descending wedge. It's a little bit sloppy. I wasn't real comfortable calling this a descending wedge last time. But if we do see this continuing up, that would, again, guys, that would kind of, watching this pattern here is just another piece of evidence that you piece together as you're trying to put together this puzzle. And it's a constantly fluid, constantly changing puzzle. It's just all kinds of factors that we're monitoring. So yeah, if this thing does continue up, if we break above, what I'm going to be watching closely is this $3,600 range. If we break above 3,600, guys, I'm going to start to get a little more optimistic here in the short term. But until we break above that, guys, I'm really not seeing much difference between this move here at all and even this move back here. It's a little more impulsive, this one is, but still not, relatively speaking, where, kind of this move here came back, correction, and then continued up here, and then we just crashed back down. And then, of course, this move here is was much more impulsive looking, and we all know what happened there. It just ended up crashing back down to new 2018 lows. So, I'm taking this with a grain of salt. It's something to watch, something to monitor, but certainly not something to get overly excited about now, and definitely not something that indicates an absolute bottom. We're seeing no indications of an absolute bottom as of yet. Doesn't mean that this might not be the bottom, guys. It just means this is something that we're going to monitor, and we'll see what happens. All right, looking at, looking at our, let's pull up the daily chart here. Looking at our MACD on the daily chart, guys, one of the other things that's making me a little cautious here is obviously we're in a downtrend here. And if I draw point to point, right at the wicks, what do we have? Okay, point to point, even with this latest rise, from this little microstructure here, we still as of right now have not created a higher high. This is still a lower high. And if we look at our MACD, again, this is on the daily chart. If we look at our MACD, what do we have, guys? We have a higher high. Now, this is in a downtrend. So this is hidden bearish divergence. So again, this would indicate that this may just be short-lived, may just be another bear trap, and we may be coming back down to at least retest, once again, that 200-day moving average on the weekly chart. So possibly retesting these lows here at about 3,100, give or take a little bit, depending on the exchange that you're using. You know, that's a real possibility. I mean, I can't ignore that. I mean, we've seen this hidden bearish divergence in the past, and it always ended up with lower prices. Now, that being said, this is different. We have had a little spike in volume. We have this kind of descending wedge looking pattern here that is a bullish pattern. So let's wait and see how this plays out. Let's wait and see if this is in fact a bull trap, or if this is in fact going to possibly give us some momentum to carry us into, you know, at least a temporary a temporary little rise in price, temporary little bull run here, if not a complete bottom. But as I said, right now, guys, we're again seeing absolutely no indication of an absolute bottom at all. This may just be a temporary bull run. So of course, what are we monitoring here? We're obviously monitoring, let me go back to the daily chart. We're obviously going to be monitoring this 8-day moving average and 21-day, or excuse me, not moving average, this 8-day exponential moving average, 8-day EMA and 21-day EMA. Now, I told you on the last update that we're going to keep an eye on this blue line, this 8-day EMA, and I told you I wanted to see on the daily chart a decisive break above. Right now, we've broken above. Let's see if we can get this daily candle to close above this 8-day EMA. Now, if we can get a daily candle to both open and close, if it closes, it'll get my attention. If we get tomorrow's candle that opens and closes above the 8-day EMA, that's really going to get my attention. That's going to, at that point, I'll start to consider this thing might have a little more juice to it. We may continue to the upside here, but we'll wait and see. Where I'm going to get very excited is if we cross above this yellow line here, which is the 21-day EMA. Again, we're on the daily chart. On the daily chart, as I've always told you guys for months and months and months and months, anyone that's been listening to me, I'm always watching on the daily chart the 21-day EMA. This is a very good sign. It doesn't mean that this is an absolute trend reversal, but it is a very good sign of a trend reversal. It's not 100%. It's just kind of one of those clues, another piece of the puzzle to kind of put in and look at the overall big picture. So if we cross above decisively, not by a wick, but if we have a daily candle that opens and closes above the 21-day EMA here, guys, then I'm going to look at this as more of a trend change, at least in the short term, if not the long term. We'll have to wait and see how that happens. Right now, let's see if we can just get above. Let's see if we can close this daily candle above that 8-day EMA, above that blue line. And if that does happen, obviously, guys, it's going to be a rather bullish sign. I'm going to get a little more optimistic. Coming back and looking at our long positions, this has also been interesting. I've been watching this, guys. We've been watching our longs continue to stack here ever since December the 11th, and it's just continued to stack all the way up here. Now, we had a little bit of a drop off here about 12 hours ago, and then in the last 8 hours, a little bit of a recovery, not much. But this is very, very interesting to watch this stack in longs. Now, we still have shorts that are outpacing longs, guys. So again, as far as market makers are concerned, really it's kind of a wash right now. Shorts are outpacing longs, not by a massive margin, but they still are. But it's something to watch. If we come over here and we look at short positions are kind of stacking, kind of on an uptrend here. Nothing massive, certainly not like longs, but they are still overall outpacing longs. So what we're getting is that spread between longs and shorts is becoming narrower and narrower. And that means the market becomes a little more unpredictable. We don't really know. As I always tell you, it's a zero-sum game. Someone to make money, someone has to lose money. But when that spread between longs and shorts gets so narrow, it becomes a little more difficult to predict, at least as far as what market makers are going to do. What's the smart money going to do? Are they going to bring it up, or are they going to short the market and bring the price down? It's kind of a little hard to predict, guys, because either way, there's no clear advantage on which way they're doing that, and so it becomes, as I said, a little more difficult to predict. So the bottom line, guys, what am I going to be watching? I'm going to be watching longs versus shorts, absolutely. Let's see if there's a massive spread in one direction or another. Let's see if shorts get liquidated massively. If shorts get liquidated and longs continue to stay stacked, if that does happen, at that point, guys, you're going to want to start watching out for that bull trap I was telling you about. And and let's say price gets up here, liquidates all those short positions, longs stay on the board. And at that point, guys, I'm going to start to, at that point, I would probably enter a short, because at that point, this is probably a bull trap and things are going to probably end up reversing course. That being said, if price does end up climbing here and shorts climb along with it and longs stay stagnant, or, maybe even if they climb but not at a greater degree or so, this thing might just continue up. We'll have to wait and see kind of how that plays out. But overall, what we're going to be watching is volume, because just because longs are stacking, and even if shorts end up dropping off the board, if we have a massive spike in volume, that doesn't necessarily mean price is going to turn back around, because remember, the more volume there is, the less easy it is for market makers to manipulate the market. And that's why I'm always telling you guys, let's keep an eye on this total volume, this 24-hour volume, guys. As soon as it gets above 10 billion on a daily basis, or even if we get a massive spike, like if this turns from 4.5 billion all of a sudden up to 7, 8, 9 billion on daily volume, that's going to be a very, very, very good sign that and assuming that price is going up, that's going to be a very good sign that we may, in fact, be hitting bottom, at least temporarily. This may have some legs. This little bull run might have some legs. So keep an eye on that volume, guys. It's always, there's no one factor. It's a combination of factors, and then looking at that combination, piecing that combination together like a puzzle and saying, what is that telling me? That's what you've always got to keep an eye on. So obviously, I'm keeping an eye on volume, keeping an eye on longs and shorts, and that spread between longs and shorts, and I'm keeping an eye on this critical area here. Right now, obviously, we've come up, and if I zoom in here, we can see that price has found resistance right on top of the prior high, right there. It wicked right into it, this prior high here. So I'm going to be seeing if we can at least break above that, and then, of course, if we can, that'll really get my attention. I'm going to watch for the retest, because, anytime price comes up, it very often comes back for a retest. So I'll watch for that retest, and I'll see if what was support, what was resistance, starts acting as support. If it does, I'm going to get a lot more optimistic, and then we'll see if we can break this resistance level here, 3,600. This is certainly the stronger resistance. As I said in the beginning, that 3,600 is really what I'm watching. If we can break above this zone decisively, in other words, a 4-hour candle opening and closing above 3,600 with some consolidation, I'm going to get very excited that at least short term, this thing might have some legs to it. So we're going to keep an eye on that, guys, and keep watching it. Obviously, to the downside, if we break back below 3,400, certainly if we break below 3,250, again, obviously, but if we break back below 3,400 and start consolidating sideways here and showing no real spike in volume or anything at all, this thing is probably going to be very short-lived, and we're probably going to just come back down and not much has changed. And we're still going to be eyeballing that $3,000 range as a real possibility. But for now, guys, let's just watch and wait and see and see how the price ends up reacting here. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please stay safe, take care of yourselves. This is Workin, signing out.